What is up, guys? It is Shark Doctor here with another video. Today I'm going to be talking about dollar cost averaging into Bitcoin and how you can profit off using this strategy. So first off, what is dollar cost averaging? So dollar cost averaging refers to the practice of dividing an investment of an equity up into multiple small investments of equal amounts spaced out over regular intervals. The goal of dollar cost averaging is to reduce the overall impact of volatility on the price of a target asset, as the price will likely vary each time one of the periodic investments is made. The investment is not as highly subject to volatility. Dollar cost averaging aims to avoid making the same mistake of making one slump investment that is poorly timed with regard to asset pricing. So basically what it's saying is, for example, usually people buy an asset, a price, and they buy it all at once. But instead, when you use a dollar cost average strategy, let's say for the span of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, a span of 12 weeks, you're just investing $50 a week. So for example, these are 12 weeks, you're just spending $50 per week. So let's say $20 it goes and you buy $50 worth that week. And then it goes down to, let's say 16, you buy there again. And then 14, you buy there again, just all the way, write it down. And then you'd have an average price of $17 a share, but the price is currently at 21. Instead of this strategy, instead of just buying all at once at $21, and then right when it's $21, you're break even in 12 weeks. But this whole time you could have had an average time by dollar cost averaging $50 per week into $17 per share, and you made a profit once it reached $21. The pros and cons of dollar cost averaging is the benefits are it reduces emotions from trading, because when you're buying all at once and the price goes down a lot, you get very emotional. But since you're buying so little at once, you don't get that emotional, since it's like you're only putting so little investment at first. You're just averaging down your price if it continues down, right? And also it's beneficial because it avoids bad timing. So if you time bad in the market with a full all-in investment, you'll feel really bad about it, right? But this, since you're buying in a slow pace, it doesn't matter where the trend goes. So that, which leads to my next point, which is markets rise over time. Like S&P, it does have a downtrend, like crashes, still going up strong, even Bitcoins, which I will get into. And so also like dollar cost averaging puts any trend in your favor, because sorry about that, puts any trend in your favor because when you buy at a certain price, right, you're buying it for little investment, little by little. So if the trend goes down, you're buying at a discount. That's great, right? But if it goes up, you're making a profit. So it doesn't matter. Whichever trend it goes, it's good for you, because the lower it is, like, the more of a deal you get, since it's at a discounted price. And then if it goes up, you're making a profit. You never go broke making a profit. So the cons of dollar cost averaging would be investors can miss out on positive returns in a rising market by prolonging the investment process. So for example, if you're dollar cost averaging and the price just continues to shoot up, if you invested a little bit, yeah, you will feel a little bit of emotions, like, oh, I should have bought more. But like I said, a profit, you never go broke making a profit. And also the other possible con is stay in an investment longer than intended. So if it just keeps going down and you keep dollar cost averaging, you will stay in that if it just keeps trending down. So those are just the pros and cons. You have to lay out the benefits and the cons at the same time. Let's say, for example, you bought $50 per week, right, for a year. Starting a year ago, right, you would have invested $2,650. You would have got a 50% gain, about a 50% gain, and you would have came out with $3,959, about $4,000 in return. So that's 50%, almost a 50% gain. That's incredible. Now let's say you did it every 2 weeks. You would have 47% gain. So basically they're just kind of similar. They're all like just around the same range. Monthly you would have got 53%. So, but you're only investing, yeah, $600. So weekly you're investing more at once. So your total value comes out better. But let's say you did that for 2 years. Let's say you did that for 2 years. You would have made 26%. Since we had a downtrend and you started, like, you're probably starting really high up. So you still would have came out on top 2 years ago. 26%. Okay, that's not great, but still, you're still in a profit, right? But 1 year ago was 50%. Let's say 3 years ago. So yeah, this website is great. dcabtc.com is a great website. You could just play around with it, show your friends, show your family. It's just something really fun. You're accumulating Bitcoin and selling it at the top, right? That's the plan of dollar cost averaging, or you can just hold it for the long term. Depends how you want to play and your analysis on Bitcoin. So yeah, 3 years ago, if you accumulated 3 years ago $50, right, 167% gain, you would have invested in 3 years $7,850, and you would have came out with almost $21,000 in 3 years. So you would have had crazy gain, 167. 3 years, 167% gain. I'll take that, man. That is a good deal. So let's say, yeah, like I said, I don't recommend buying daily because it does eat up fees. So at least between weekly to monthly. So if you're gonna do monthly, you could do higher price. Let's say you did $500 a month. Just for example, let's just have fun with it. 3 years, you would have made 186% gain. You would have invested in 3 years $18,000 and came out with $50,000 on top. So 3 years, 186%. I'll take that, man. I will take that and invest it into other assets, or just keep continually dollar cost averaging, right, when I find the right entry. So yeah, this is just something really cool I found out. Dollar cost averaging Bitcoin, very smart strategy for the long term. If you enjoy doing the long term and have the patience to do it, this is definitely a easy strategy and free, as long as you just start a little bit lower on the chart. You start accumulating there, the lower the better. But it's better if you dollar cost average in case you feel afraid of missing the run, like the bull run. But yeah, the lower you start, the better, as always. So dollar cost averaging strategy. Thank you guys for watching. Like, comment, and subscribe if you enjoyed the video, and join our Discord server. I will put a link in the description. Don't forget, this is not financial advice. I'm not a financial advisor. This is just purely educational and entertainment purposes.